Hi everyone, let's go over my Elliott wave scenarios on the Bitcoin chart, covering the weekly, daily and the 1 hour time frames. Starting on the weekly time frame with the higher probability scenario, where we are looking for a 5-wave impulsive structure to the upside to end and then have a bigger retracement to the downside. The common target area for your wave of 5 is between 81.3k and 129k, and based on the local structures here, preferably we are still looking for higher prices before then getting that retracement to the downside. Something else that we always want to keep in mind with impulses is the volume. What is most common is for a wave 3 to have the highest amount of volume, which is the case at the moment, and then for price to create another higher high on a lower amount of volume, which here on the Coinbase chart is also true. Now, if price would continue towards the upside and volume is going to increase and move beyond the volume pivot here inside wave 3, we have to be aware of the more bullish scenario, which at the moment is an alternative scenario. This scenario will only get the highest probabilities if volume is going to significantly increase or you're moving way beyond the common target area for your wave 5. Now in this scenario, we are looking for a multi 1-2. So we have a 1-2, 1-2, preferably actually looking for another 1-2 because based on the local structure here, it is nicer to finish this impulse. You can see a bit of a grind here, quick move to the upside, and now we are like grinding upwards again, which is a typical impulsive structure. 1-2, 1-2, 1-2, 3, 4, 5, 4, 5, 4, 5. So you end with a bit of a range, you start with a bit of a range, and then you have the impulse in the middle, which is pretty much what we can see here. And then of course, after the grinding here, we preferably eventually see a retracement. So therefore, there is the potential for an ending once again of another wave 1 in blue here, and then look for a retracement in a 2. After this 2, we then look for continuation to the upside in a wave 3, and then eventually we move into a grind again for a couple of 4-5s. But basically with this scenario, you expect much higher prices. Invalidation is 49k. If we then go to the daily time frame, then on the daily time frame, both of the scenarios that I have the same conclusion, which is we're still looking for price to move towards the upside. But they are slightly different. On my chart here, you can see an impulse that starts with a double 1-2 and then looking for 3 white 4, then eventually finish 5 to finish blue 3, and then another 4-5. In other words, in this scenario, you're looking for 2 more pushes to the upside. The common target for your wave 4 is already touched over here, so that is very nice. And price on the index chart also touched the 886, which is important. On my Coinbase chart here, we just actually missed out on touching the 886, but on the index chart, we did hit it. So I do want you to be aware of the 886 probabilities. Now, what does that mean? Well, the moment an 886 Fibonacci is touched, taken from the all-time high to the low that we made here with the very quick move to the downside, it increases probabilities to eventually take out the all-time high. The 886 is very rare for a wave 2, but very common for a wave B, X, or any other corrective structures. Any retracement coming off the 886 has a higher probability of being a wave C, wave Y, or any other corrective move, increasing the probabilities to at a later stage still move up and take out the high. So it creates a directional bias, which is of course what Elliott waves is for. So in this scenario, we are then still looking for price to move towards the upside, but in this case, we look for 2 more pushes to the upside, while in the other daily scenario, we're actually looking for 1 more push towards the upside. So here we then have our 1-2, 1-2, 3, 4, 5, finishing blue 3, looking for a blue 4, and then a blue 5 to the upside. Now in this scenario, we are looking for a longer sideways range in the blue wave 4, because at the moment, a price here has not yet reached the vertical line on my chart, which is preferred. Now let me explain. The vertical line is a fib time, taken from the start to the end of blue 2, and then the third click is on your blue 3. So you're comparing 2 in time with wave 4 in time. And it is most common for a wave 4 to end on top of or after the 1-to-1 fib time being longer than a wave 2, which at the moment clearly is not the case. So therefore, preferably, we're not yet finished ranging in this blue wave 4. And how attractive would it be to create a flat in a wave 4, which by the way is a common structure in a wave 4, but it is mainly interesting from a psychology point of view, because in this scenario you would take out the all-time high, which then creates more buyers and people that FOMO into positions. You grab that liquidity and then drag it to the downside, hitting the stop losses and liquidations, which will only accelerate the move towards the downside, creating a high amount of volume, high amount of fear is preferred. And then preferably you take out all these lows here, especially the low at 90.5k would be nice, maybe even touching the 80s again over here, like the 382 at the 86.7k area. And then once you grab the liquidity here and maybe people start selling because they're scared, you actually use that liquidity again to move towards the upside. From a market maker's point of view, it is super attractive and definitely a scenario you should have in the back of your mind once price takes the all-time high. If you take the all-time high, a flat is always going to be the bearish scenario, bullish is continuation. Now the invalidation for this scenario is the 618 here at 76.1k. Looking at the 1 hour time frame, your bullish scenario is a finished 3-wave corrective structure in a WXY, and now we want to see continuation to the upside. So we then have a wave 1 looking for a 2 and then continue up in a 3. Now please be aware that it is Friday and it is very rare to start a wave 3 or accelerate in a wave 3 during the weekend. So if anything would happen, then let it be today. But during the weekend, most commonly you're ranging sideways, and then next week would be the week of some volatility again, right? So on the chart here, what you can see is the common target area for a wave 2, which is between the 05786 taken from the start to the end of 1, 98.4k and 96k. Minimum target, however, is touched to 0.382 at 99.4k. And the reason that my polyline here on the chart is moving the way it does is because we have some resistance to the upside here, the blue box, and some additional support to the downside. So the resistance here is between 100.9k and 100.2k, and then to the downside your support here is between 96.6k and 97.2k. So that is very attractive indeed, and those will be two areas that I will be keeping my eye on. Looking at the bearish scenario, there is two counts that I have on my chart, but they move in a pretty similar way. It's the WXY and the ABC flat. And in these scenarios, you preferably take out the 102k high first. So in this case, if we look at the WXY structure, then W is a zigzag, X a double zigzag here, and then you want to see a wave Y. And because wave W is labeled as a zigzag, your wave Y preferably is a flat, which is the yellow line, or a triangle ABCDE continuation to the upside in the orange line. While if we look for a bigger flat structure, which is the pink count, we have a 3-wave A, then we look for a bigger 3-wave B, and then a 5-wave C towards the downside. And the common target for your pink B here is between 106.8k to 108.5k, right? Far above all-time high, and then you drag it to the downside to take out the lows. Very interesting indeed. If you then look at the CVD divergences, then a price here moved towards the upside, supported by bullish CVD divergences, created a high, and then of course came back towards the downside here, creating some more new bullish CVD divergences, which is at least good to keep in mind. But what I do prefer to see and prefer to keep an eye on is the CVD divergences that we get on the right side here of the recent high as well as the recent low. More local CVD divergences always get the priority. So price here made a low, moved to the upside, retracement, bullish CVDs played out as price took out this high. So at the moment locally here there are no CVD divergences, and we are just looking for price to continue ranging and give us some more information. If we then finally look at the probabilities of the different scenarios, then on a weekly time frame, the probabilities are higher for the conservative scenario, this scenario over here, compared to the very bullish scenario because of the volume. And of course, in a more bullish scenario, you want a lot more acceleration, moving far beyond the target of your wave 5. Generally, however, on the weekly time frame, a retracement in both of the scenarios makes sense. If we look at the polylines here on the weekly time frame, then you can see that in both of the cases, looking for a move down is actually very attractive. This is basically a summary of the price action that you can expect on a weekly time frame, right? So we have, with the conservative scenario here, we have price moving up and eventually down in yellow, expecting much deeper and bigger retracement, basically a bear market. In a bullish scenario, continuation. And if we then compare the polylines, then what would be interesting in both cases is for price to eventually top out and get a bigger retracement. Now on the daily time frame, the probabilities are highest that we are still looking for wave 5s and higher prices. So on the daily time frame here, this was one scenario that we spoke about, and the other one is this one here. And if we then look at the polylines, then in both cases we are looking for higher prices. Now please be aware of potential downside with a flat for the blue wave 4. Of course, on the 1 hour time frame, the probabilities are higher at the moment also to look for upside and then eventually take out that 102k high, which can create a bit of a start for the potential of a flat. So in both of these cases, we of course look for price to move to the upside. It's just that in blue you would expect a much deeper retracement and a continuation of the range. And then on the 1 hour time frame, we have covered different scenarios here, of course, but generally we are still looking for price to take out the 102k high, right? But there is the potential for retracement to support at 96 and 97k. And if I then open the polylines here, then you can see a summary of what the scenarios on the 1 hour time frame look like. But it also gives you the opportunity to see the confluence between the different scenarios, right? So the confluence here is that all of these scenarios have a higher probability of moving to the upside first and preferably taking out the 102k high. Of course, we have interesting support to the downside, interesting resistance to the upside, right? Those are areas of interest to maybe look for some interesting positions, but generally from an Elliott wave point of view, this is the movement that we would expect on a 1 hour time frame. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.